You've probably been in crypto long enough to learn that there is a 4-year cycle where every 4 years, crypto goes through a parabolic move up. Now, since I came into crypto, there has been talk about a super cycle, a cycle that is much bigger than normal. And the question many of us are asking is whether this cycle will be that super cycle with institutional money coming into crypto, not just through ETFs, but perhaps through additional ways, as our guest today will be sharing. We are joined today by the real Randy Chavez, one of my best friends in the crypto space, with his own very successful YouTube channel and his own questions for our guest, Manu Choudhary from Definity. So help me welcome Randy to the show.
Hi, everyone. I'm back in New York. Look at Dashy.
Randy, so good to have you here. I'm glad you could join us for our interview with Definity. You've had a chance to speak with Manu a number of times. What have you liked about Definity before our guest joins us?
I really love disruption. I love disruption, and take a look at first principles. Okay, whenever I look at a company and I say, okay, what are you doing? Are you taking someone else's invention and are you improving on it? Or is there a problem that nobody is solving right now? And what are you doing to solve it? And a lot of big institutions, they, were weary about crypto for a while. And he's been at the forefront of kind of bridging that gap between big institutions that don't even say crypto, say like digital assets. And they've been kind of walking them through, holding their hand about self-custody, about forex trading, spot trading, and then merging all of this with crypto and having a bunch of things on their network, such as getting on Fireblocks, and slowly been building the last couple of years. And that's one of the things that checks off a really big box of, hey, what issues are you solving? And it doesn't seem like anyone else in the space is doing that, at least not at this level. So Manu's been, and it's not like he's someone that's strictly from crypto and then trying to cross over. He's been in the banking industry for like 20 years and then got into crypto X amount of years ago. And now that he has that knowledge from both spaces, he's like one of the perfect ones to merge them. So yeah.
Exactly. When I'm looking at crypto projects to invest in, I always ask myself, what problem are they solving? And is that problem relevant? Like, is that really going to create some growth? Does it solve some real problems? Is there a real use case for that? Because businesses are really created to solve problems, right? So we go to the store and it solves the problem of having all this food available for us to easily purchase with our money at hopefully as low of a cost as possible. It solves the problem for us. And that's why stores, if they do that effectively, are successful. And so businesses need to solve problems. And so in the crypto space, I look for those crypto projects. I don't touch those meme coins and other things. I look for ones that are substantive, that solve problems. Now, our guest is here and joining us. So why don't we bring him on? We can ask what kind of problems Definity solves. Manu, thank you so much for joining us.
Hey guys, how you doing?
Fantastic.
Doing all right. Great to see you.
Likewise, Randy. Likewise, Jay. Thanks for having me on again.
Yes, excited to hear you've been sharing some updates with us over the past couple months with things going on with Definity. But before we get to that, like, what is Definity? For those that are new, have never heard of Definity, what is Definity and what does Definity do?
Yeah, sure. So maybe it's worthwhile giving a bit of context in terms of me and the businesses that we essentially run and essentially what we're trying to achieve. So look, I'm Manu Choudhary. I'm the CEO of DMA Link and also the co-founder of Definity. And essentially, prior to joining the world of fintech in 2019, I spent probably, about almost 19 years working in traditional finance, or TradFi, as the crypto kids call it. And that was working for Lloyds. And then prior to that, Barclays Investment Bank. So to UK investment banks, principally focused on FX and FX options for corporates and institutions. So that's kind of my background. In 2017, I suddenly became a bit of an evangelist. Now, I can maybe discuss that later as to why that happened regarding digital assets and Bitcoin specifically. And ever since 2017, I've been trying to work a way of getting the bridge between TradFi and the digital world to work properly, because it doesn't work properly. It's still broken. And that was really the essence of the idea for Definity, because I look at the cohort of clients we deal with. So DMA deals with banks, also with hedge funds and fund managers. They all have a growing requirement, would you believe, even banks, for buying, holding and trading digital assets. there's no mechanism that existed for them to do it in a safe, secure ecosystem. So we got to put our hats on and said, okay, what is it that inspires us about digital assets? Well, they are solving a phenomenal problem. What is it that inspires us about well, maybe not inspires, but maybe is of value and of use of the TradFi world? Well, the value principle or the value proposition is a very, very robust, tried and tested legal framework. So we thought, okay, let's take the legal framework of TradFi and combine it with the opportunity we see within digital assets. And what do we have? And that was really the origin of Definity. So it was really built to help bridge the gap between TradFi and digital assets, but use the same legal principle, the same legal framework that existing counterparties in TradFi used to. So fund managers, banks, hedge funds, proprietary trading firms.
So in other words, if I were to summarize that, traditional institutions that were able to invest some of their funds in like foreign exchanges and other traditional finance things could then use the same platforms that they're used to, essentially go a same route that they're used to be able to get exposure to crypto.
Absolutely. So we've made it very easy for them. What we've done is we've said, okay, we've probably should have mentioned this, but we've partnered with one of the largest European investment banks. And essentially what we've managed to do is we've managed to convince them to allow existing and also new to bank clients to use their existing credit lines to trade crypto with us exclusively. So if you're able to trade FX, bonds, equities, commodities, whatever you're trading, and you have a credit line of, let's say, I don't know, 20 million bucks or 50 million bucks, or you have cash collateral, or you have G4 government bonds, so US, UK, German, and Japanese, you can use any of those to trade with us within milliseconds. So the process is very easy, very quick, and we've used existing documentation. So effectively, when it comes to institutions, typically what they do is they access what's called a prime brokerage. So a prime brokerage is a subsidiary or a division within an investment bank, and they essentially work as the mechanism for them to access credit and capital markets and financial markets. So you go along with a hedge fund, you say, I have, I don't know, $100 million of cash, and they will leverage it 20 times and give you $2 billion of credit lines, and you can do as you wish with that.
So when you go and you talk about exclusivity, how long is the timeline for that? Is it for 2 years, is it 5 years, 6 months? And is there a potential for renegotiation when the X amount of years is coming up? Can you renegotiate and renew it?
Sure. So the exclusivity period is really until we conclude our test phase and our proof of concept. And the reason we've kept it reasonably short is we don't necessarily want to shoot ourselves in the foot. Yes, we're partnered with a bank, but what we've seen in terms of value creation, you don't just have one bank in an ecosystem, you need multiple banks. And there's probably half a dozen European banks at the moment that are looking to push forward in digital assets very aggressively. So we want to keep the door open. Now, obviously, we are very grateful that this particular bank has looked at our model. They love the model. They're very excited about what we're trying to do. And they've started to back us with their balance sheet, which is $1.5 trillion. It's enormous. So for that, we decided that we obviously want the initial phase to be exclusively with them. But realistically, we want to give clients the option and the ability to be able to trade with other banks within that same ecosystem. So if you think about the bank is basically the backstop. They are underwriting the credit of all the trades. So you may be trading with a hedge fund, you may be trading with a digital asset market maker. What the bank is doing is it's ensuring that if one of those trades fails, that you are made whole. So there's no risk of an FTX scenario whereby assets disappear into Alameda Research to do God knows what. None of that happens. So it's very transparent. If they already have assets with this bank, it's very easy. They can just add to those assets or reallocate, so ring fence those assets to trade with us. We don't touch them. So our FX model that we have, which is DMA, essentially we have a prime broker we use, which is NatWest Markets, and essentially all trades settle through that particular prime broker. But we can face anyone. We can face JP, we can face Goldman's, we can face Citi. We don't really care. It's irrelevant. But what it means is that it's not just about, well, what's your balance sheet? How much cash do you have as collateral with these counterparties? It's irrelevant because I'm not the counterparty of the trade. I'm just a medium for buyers and sellers to meet anonymously to transact. That's it. And that's exactly the model that we're creating for digital assets.
I had to chuckle at your characterization of exactly what the problem was with the current exchange model, right? Was you had very sophisticated investors giving their funds over to FTX thinking they were safe. And then those funds were being handed over to Caroline. And after watching some videos of Caroline oh my gosh, I'm sure the people that were putting their money in FTX, if they had known their assets were being used by Caroline over at Alameda Research to speculate, they would have like had a heart attack. And so they didn't realize the risk of putting their funds on FTX. And so what you've given them is what you've given serious institutions, serious players, is a route where their funds are not at risk. And it's a route that most institutions were already familiar with for trading foreign currencies and other things on the Forex markets, right? Is that a good summary?
Yeah, bingo. That's exactly what it is. So, I watched those videos of Caroline Edison, and God knows how the hell she got the role. But anyway, so we have a very different view to risk management. And look, I know there's a lot of crypto purists that look at this and go, well, we're trying to beat the banks and we're trying to create our own ecosystem. The reality is, that's great, but the banks dominate financial services. You either partner with them and scale quickly, or you're going to be essentially usurped by them. There's not a single market that exists today in TradFi that's not dominated by banks making markets. It's just a matter of time. So I understand the logic and the rationale of what they're saying, and I get it. But the reality is that we're in this to try and make this process of institutions entering the crypto market as quick, easy, efficient, as safe as possible. Because ultimately, what are we trying to do? I love nothing more than buy and hold investors. People that come in and say, I want to buy 50 Bitcoin a week forever. That's my perfect client. I love those guys. That's brilliant. And it's great for us because it shoots up the market cap of everything. And it helps us to stabilize pricing. So look, I'm a big fan of this and a big advocate of getting institutions into this market as quickly and efficiently as possible.
Yeah. Now, how is what you're doing going? You've recently, so you created an exclusivity, giving one bank, basically they're underwriting this for you. So they have exclusivity, and you actually have it where institutions can access crypto now. How long has that been running for, and how is it going?
Yeah, so essentially it's been a hell of a ride. So look, the longest period of time has been trying to get our head around the regulatory framework, and it's an absolute minefield because again, even now, it's not very clear where the SEC's view or vision is in any of this stuff. It's very difficult. And look, let's be honest. I think with the best one in the world, you can pretend we'll do everything excluding the United States. But last time I checked, the US has the biggest bond market, the biggest equity market, the biggest commodity market, and the biggest economy. So you can't do that. So I think the SEC and the US regulators, because I don't know why the US have about 500 regulators, most people have one or two, they need to get their shit together, and they need to do it quickly, because there's no industry the United States does not dominate apart from this one. So I would be willing to wager, hopefully in November, we see a bit of a change at the helm of the SEC, and Gensler's fired, hopefully, I don't know. And if so, then I think we're going to see great things. But I think that's the backbone of this. And one of the most challenging things we had was navigating the landscape. So initially we were regulated out of the BVI. BVI was then grey listed by the Financial Action Task Force. So we thought, oh shit, now what do we do? Then we had to find other jurisdictions, which eventually moved us to Mauritius, and then we're applying for our license in Jersey. And so that's been the biggest challenge with really launching the business. And what we've done is that the model I'm talking about, the bank model, will be going live in probably the next 3 months. The model that's live at the moment is essentially a bit of a feeder. So essentially, it's creating a funnel of opportunity clients to go into the bank model. So that's our USP, which is, look, you trade with us today, and we will put you in that, not the first cohort, but probably the second or third cohort of the bank model. So that's what everyone's excited about. And I can't really go into the specifics of the numbers, but put it this way, we have gone from, in December, doing maybe what was barely a 7-digit number to increasing that more than 100 times. So it's gone parabolic. And this is just the beta test. This is not even the proper version. This is the beta test of our model. So what it tells me is, it gives me confidence that the idea that we had, what was it, 3 years ago when we initially put this together, was the right idea. We weren't taking crazy pills. We saw the issues and the problems in the market. We fixed them properly. And actually now it's come to fruition. So people are recognizing that we were correct 3 years ago. Which is great. It's a huge accolade to the team, and a huge testament to us having the confidence and the faith to keep on moving forward. Whilst everyone's calling us crazy 3 years ago, this was never going to work, and lo and behold, here we are, and it seems to be working.
I love that. There's so much. So when you were talking about, and I know you can't say specific names, you're talking about you already have a partnership with like a AA rated bank, and then you said there's other banks that are like about half a dozen that are looking to get into this as well.
Yes.
comparatively, if we compare banks to banks, how are they in relation to size? I'm guessing that they've all got to be a bit smaller than the relationship you have with this one, correct?
Yeah, so look, I think there's two different demographics here. So, well, technically there's three, but let's look at the two that are the most relevant. So you've got the US banks, and Goldman's and JP are moving forward very aggressively, but they're being very secretive because I guess they're concerned about the SEC. If you look at all the other banks, we've spoken to most of those other US banks. They're just waiting for a change of the guard at the SEC, and I think that they're just twiddling their thumbs. I don't know what they're doing. The European banks have been very aggressive. Surprisingly, I was astonished by how aggressive some of the Spanish banks and some of the French banks have been. They are really moving forward. And some of this I can talk about publicly. So, for instance, SocGen was the first bank to essentially create a bank-issued stablecoin on the Ethereum Layer 1. And what was different between this stablecoin and the one that JPM did, JPM coin, was it 3.5 years ago? So that's a proper OG stablecoin. The big difference is that this time the assets are held by the Banque de France, so their own local central bank. So there's no basis risk between SocGen credit rating and the sovereign credit rating. So that's it's essentially a synthetic CBDC. It's a very, very smart product. Now, I'm not going to comment on how the execution went because it wasn't great. It was very clunky, not very easy to use. But that was the first go. That was the beta model for this. A couple other French banks are doing the same thing. They're going to be doing their own stable coins, I would believe, at some point this year. And then we're probably going to see a couple of other European banks do exactly the same thing. So the biggest headache that banks have, so a lot of the European banks we're speaking to are happy with Bitcoin, happy with ETH, and that's about it. But the issue they have is the stable coins. They have a problem with USDT and USDC, would you believe, which I'm surprised at. So in order to get around that, our suggestion was you're a bank. You can create money. Create your own stablecoin, guys. I mean, you have the capacity, the means, and the capital. Why the hell wouldn't you do it? And it looks as though that is potentially what they're doing now.
Ryan, you're on mute.
Great question. Jason asks, Manu, I'm an investor. Can you speak to how this product scales? You mentioned facing Citi, Goldman, etc.
So look, the way this product scales is very straightforward. So, okay, let's look at the FX business for example. What we're trying to do is do the same thing we've done in FX. So in FX, we have an ecosystem whereby we have a bank that we're working with. They basically are essentially underwriting the credit for us to trade with other counterparties anonymously. At the moment, we have one bank. If we get more than one bank in, we scale very quickly, very aggressively. So the key thing here is to launch the bank model, go through the beta test, go through that initial cohort of those clients we're working on, and there's only about a half dozen to begin with, but they're all absolute behemoths. They're huge clients. And then once that works properly, then it's to go to market and then again speak to one of the half dozen European banks and say, listen, guys, this is what we just launched. We've been very tight-lipped about how it works, but these are the mechanics, this is the process. You can try and copy the model if you wish, which you're welcome to do, or you can just come and join the party and save yourself 2 years of legals, which is the approach we're going to take. And then those banks come in, they join, we have a bigger ecosystem, and then suddenly it's not just one bank's clients, it's 2 banks or 3 banks or 4 banks. So I think this scales pretty quickly. And I think this creates an entirely new mechanism of trading for these institutions. So I'll give you, for instance, let's say I'm a hedge fund. Okay. I can't go to my bank and say, I'd like to trade Bitcoin, because they'll say, great, we don't do it. Whereas in our scenario, they can say, yeah, no problem at all. You have 100 million of credit. We can allocate 10% of that. You can trade on this platform. Oh, by the way, you can use your existing documentation you've signed. There's an addendum in terms of provision of service that we have to sign in addition to what you have, but it references all of the documentation you've spent a year and a half negotiating with your very expensive lawyers. That makes that move to use us very quick, very fast, very efficient. And I think that's the big USP in terms of what we have. We can look at those existing clients that essentially are with the bank today and very quickly scale just internally with those counterparties. Because the only route available to them is to go to an exchange like a Coinbase or a Binance. And the problem you have is if you look at the annual report of Coinbase, in a default scenario, which they state, any digital assets held by Coinbase form part of the balance sheet of Coinbase, and there ain't your assets. It genuinely is not your keys, not your crypto. Now, if I'm a fund manager, I've got a whole bunch of asset allocators to answer to. I can't do that. And it doesn't matter which exchange you look at, every single one does the same thing. There's no client money rules today that exist for digital assets, and there probably won't be for another 4 years. And none of these platforms and none of these exchanges have credit ratings. Yes, Coinbase is listed. It doesn't have an S&P, Moody's, or Fitch credit rating. So a lot of these asset allocators who really call the shots with where money is put are saying you need to get into digital assets. You need to buy Bitcoin. You need to buy ETH. But they're saying it has to be with a credit rated entity. So it has to be with a counterparty that has a credit rating that is investment grade, i.e., it's better than triple B minus. That does not exist. And we automatically fix that because the bank we're dealing with has got a AA minus credit rating. So instantly they can face our credit risk, which is basically not our credit risk, it's actually the bank credit risk, which they're comfortable taking anyway.
Yeah, great point. Great explanation.
There's you've been doing a couple of these. You did an AMA yesterday over on on X, and then you did there was a Discord AMA like last week.
There was, yes.
Yeah, and you guys have been doing a lot of really big fun things. I think that particular AMA on Discord was recorded by someone. I don't know if that's available to the public yet, or if it's just you need the link for that. And now you're doing this today.
It is. I need to have a chat with Chris and double check. Yeah, I'm pretty sure that was recorded. That is available for people.
Yeah, I saw it, but it was, you needed the link in order to listen to it. Like, I didn't know if that link was public. Like, it wasn't a public video as of yet. But
okay, I'm pretty sure it will be.
Okay, great. The reason why I brought it up is because it seems like you guys are doing a little bit more and more market outreach and a little bit. What type of other marketing campaigns do you have? Do you have any type of thing to raise awareness or any type of raising liquidity?
Yeah. Yeah, no, absolutely. So look, I think it's probably maybe worth telling you the reason for why we haven't done this earlier. You know, the reason we kind of waited was we're now a stone's throw away from getting our actual license in Jersey, which allows us to launch the bank model properly, which is huge. You know, this is going to be one of the biggest things that happens once that is launched and we're able to announce who this bank is, which I can't right now. This is going to be a game changer because it's one of the big ones. And essentially what will happen is that we will see a huge amount of volume, I think, gravitate towards us because it remedies a whole bunch of headaches that exist. But the reason that we've kind of not spent too much time and effort on the marketing is because we weren't really in a position to do that. You know, we didn't have any, I mean, look, we had a lot of belief and confidence that we've got a great idea. We think this is going to be a game changer. We didn't have anything more substantive. Now we do. We've got a whole bunch of clients that have been trading with us for the best part of, let's say, 5 and a bit months or 6 months now. And volumes have just gone parabolic. So we're obviously doing something right in terms of the ecosystem we've created and how we've actually put things together. So what we've looked at is we're waiting to make sure that, again, we're not taking crazy wheels. We do have a credible business that is scalable, that works. So again, I see a lot of projects out there that have a lot of hype. They have a lot of marketing that helps people to understand how awesome they are, but they don't have an underlying business model. Our business is going to basically become EBIT positive probably in the next 6 weeks. That's remarkable. That's before we even launch the bank model. So we're going to be basically churning a profit before we launch the model that's going to turn us into a $1 billion company. You know, which I think is incredible. So the point, I believe, to really up the ante, the marketing, is now. So one of the things I wanted to, and again, this is an exclusive for you guys, is announce that in order to get more eyes on the project, because at the moment we're on DEXs only, so we're on the BSC layer 1, we're on the ETH layer 1 as well. So on PancakeSwap and on Uniswap. But essentially, we're going to be listing later on this month onto MEXC. So we're going to be listing on a centralized exchange to make it easier for people to get excited to buy the token and experience the benefit of the utility of that token.
That's amazing, because right now it is a little bit harder for non-native crypto people to go in and try to send some ETH over to, Uniswap or PancakeSwap and try to swap that. But to get on an exchange like MEXC, which anyone can use in the US, I think you need a VPN, but most of the rest of the world can use it. That's really exciting.
Yeah, absolutely. And I think also, look, if you look at 80% of all crypto trading or 80% of crypto volume is done on the centralized exchanges, it's not done on the DEXs. So there's additional layers of complexity. Uniswap is bloody awful. It's so clunky. When I first started using it in 2017, it was just almost impossible. I still find it very challenging. The slippage is terrible. It's just, you know, the issue with bots and everything else. It's terrible. So it is a nightmare. It's a challenge. But now we're in a position whereby we really want to get eyes on the project because we're doing something very, very unique, and we're doing something that is scaling exponentially.
Agreed. So yeah, that's big news. MEXC, good centralized exchange. I use it a lot. Question about came from one of Jason Pena again. Have you considered also moving it to Base? As like, I'm glad that you've been on PancakeSwap because that's made it really easy to get it for me on the Binance Smart Chain with really low costs, even when ETH fees go through the roof. PancakeSwap's been or on Binance Smart Chains made it easy for me to continue to accumulate. Have you considered also extending that to Base? As I see a lot of the DEX action probably is going to go towards Base.
Yeah, so that we had this discussion a lot, and my view initially was to try and get onto a couple of layer ones, but unfortunately the layer ones we were looking to get onto just didn't really do what I expected them to. So look, I've been a big fan of Cardano for a long time. I'm hoping they do something at some point soon because the build is great. There just ain't any products. You know, it's the opposite of Solana. You know, where the build is not great, but there's a shit use of utility. You know, there's the thing. It's like, you know, I think that's fundamentally the issue that we have here. So look, it's definitely something that we're considering. Would it be Base? I'm not sure. I think realistically, it might be a layer one that has a little bit more robustness, if I'm being very honest with you. But it kind of depends. You know, this is something that we have a discussion about every couple of weeks. And I think ultimately we're going to be led by the community in terms of what they actually want. I think for now, we'll leave it as is. But yeah, we're open to it.
We are seeing that a lot of people are coming in that they're new to crypto and they're getting a Solana wallet and being able to exchange on that pretty easily. So Solana would also be a great choice.
Yeah.
I think Jason clarified here, sorry, on ETH Coinbase wallet so that people can swap right through the Coinbase wallet. The decentralized one, I think, is what he's talking about. I don't know what steps you have to go to get on that.
I've done that. Swapping, that's how I'd buy Definity. I'd buy it on Coinbase wallet.
Okay, so it is already there.
Yeah. Yeah, swap ETH for it. But yeah, in order to buy Definity, you do what you have to do. And that's what I did.
Yeah, so look, we obviously got to taking a step forward to make that a lot easier and make life less of a headache for people that want to actually go out there and push the token.
Yeah. So
Senti Crypto, great news. MEXC is a solid and popular central exchange to use. And that's from Randy.
I was pumped. I was like in the group chat. I was like, go crazy, folks. Go crazy.
Yeah, that is awesome.
This is great for liquidity. This is great for being able for people to trade a lot. And the volume's been it's been a great improvement in volume the last week. I think a lot of that does have to do with you guys really putting yourselves out there, whether it's on Discord or on X or on here. I'd imagine this is going to be the first of X amount of exchanges. Is there a whole marketing campaign strategy for that? Or is it like we just got to take it step by step, focusing on the core of the business, and liquidity is secondary for now?
Yeah, so look, I think it's something we're doing in tandem. So the way I want to play this is essentially that we hit a whole bunch of milestones internally for the business, which I think that, look, fundamentally the most important thing is the business pushes forward and scales and grows. That is the most important thing as far as I'm concerned and the team's concerned. Once the business hits those milestones, as we've done recently, that's when we need to then focus on making sure there's greater awareness and there's a broad understanding of what it is we're doing, how we're doing it, what the offering is. So absolutely, there's a marketing campaign that we launch in conjunction with MEXC to increase awareness and raise awareness of the token, raise awareness of ours and what Definity is trying to do. Once that is bedded in, there will be obviously a couple of milestones we need to hit over the next 3 months. Once they're hit, we will then look to list on another exchange, one that's probably a little bit bigger with slightly better liquidity. And again, to do exactly the same thing, which is just to raise awareness of, again, what we're doing, how we're doing it. I think once we're on a, I don't know whether MEXC is a tier 2, probably is a tier 2, but let's say we're on a tier 2 and a tier 1 exchange, I think that will be it. That will be done. I don't think there's additional benefits of being listed on 25 exchanges. I don't really see what value that brings. I think if you're on one tier 1 and one tier 2, you probably have opened the door to a broad enough demographic to come along and buy the token. And I don't necessarily think it's effective or efficient to be on lots and lots. I mean, I don't know, I could be wrong. I mean, maybe we'll do more than one, but I suspect that probably will be enough.
It does make sense that if I do like the direction of focus on the business and what the business does and let that take care of a lot of it, with opening some inroads to marketing and other things, because sometimes awareness in crypto is hard to reach. But it's funny how when you have a really good story and your project is doing lots of the business it's supposed to be doing, that just amplifies when awareness does come around, the growth potential of the token. As an investor, I like to invest in projects where I feel like the awareness is really low, but they have something really cool that they're doing, a problem that they're really solving, and then awareness goes really high, and that's what creates the big swing in the price that I really enjoy. And, you know, awareness on Definity has been really low, which has been amazing to me. And the community, I know most of my community has also liked what you're doing at Definity and are big believers in what you're doing. So thank you for joining us so much and being a strategic partner with the channel. We love hearing what's going on, because a lot of my community thinks like me. We like these early stage businesses, and you're not so early stage anymore. You've been doing this for about 4 years. But your business model is just coming into play, where all those connections, all that work is coming together. And as that hits, usually it's then easier to get a whole lot of positive press related to what you're doing. And at a certain point, when tons of trading volume happens on your token, all those other tier 1 exchanges are coming to you. Instead of saying, hey, yeah, we want, you know, if you want to list on our exchange, it'll cost you 500,000 or $1 million or whatever their prices are. They come to you and say, can we list your token?
Yeah, absolutely. I think that's something we're kind of looking forward to. And again, look, in terms of the other things that we're doing that it's worth mentioning is look, we're going to publicize a couple of partnerships we have in the pipeline, and these are partnerships with some very, very interesting crypto projects that are working again on solutions that remedy real world issues and real world problems. So again, that will be coming out very, very soon. But I often get asked this question by people saying, well, you know, who are your rivals and what are you doing, and how do you create, you know, barriers to entry, and you know, what are you going to do to defend your position? And the reality is that look, there's loads of people trying to do what we're doing. And the reason that you're right, you know, as a business, we've been around for a couple of years. The reason it's taken so long to get here is when you're negotiating legals with a bank, they ain't fast. They'll go to their external legal counsel, and they will take a long time. You know, it took us 2.5 years to get all the documentation into a position where everything worked properly. And to be honest, all we were doing was we were adding an extra product, which was digital assets, to existing documentation. It takes forever, and it takes a lot of time, effort, and a lot of money. So the biggest barrier to entry is that legal framework that we have. That is what's probably going to keep the wolf from the door for long enough for us to scale quickly. The other thing that's really interesting about digital assets, and very different to TradFi, is that one of the partnerships we've had so far are very collaborative. So, for instance, on paper, if you look at One Trading, which is formerly Bitpanda Pro, they have a rival business, and you look at their business and think, well, surely this is going to cannibalize your business. But the reality is, the guys that set that business up, the guys that work there, they're ex-JP guys, you know, on the FX side of things. Very smart chaps. We get on really well. Again, just because we're cut from a similar cloth. We're TradFi guys. We love crypto. You know, so that's quite unusual. Most TradFi people hate crypto. So we get on very well with those guys. We've got a great relationship, and we are looking to scale with them. What we discovered very early on was they are building probably the world's best derivatives platform. You know, it's amazing. I've looked at how it works. I've looked at the tech. It's remarkable. It's amazing. I instantly said, look, guys, I can't compete. What you guys are building is going to be the best thing on the street. So I'm not going to bother competing. What we're going to do is, if we have derivatives clients, we'll just introduce them directly. And they looked at our bank model and said, wow, when you launch your bank model, this is going to be incredible. So they will be part of the bank model ecosystem. So it's very collaborative. Whilst we should be direct rivals, we look at this and think, well, actually, our demographic clients is slightly different. We're trading spot, they're trading derivatives. And yes, there's a lot of overlap between those clients, but quite frankly, we could spend a lot of time and effort competing with each other, or we could just work collaboratively. And we have a whole bunch of clients that will trade derivatives that we've already onboarded, we're already trading with, and vice versa. So I think it's a very it's a very virtuous circle that we create with it. So it's very unusual. And that's one of the very interesting things about crypto is that it's much more collaborative than TradFi. TradFi is very ruthless, very cutthroat. And of course, there's that element that exists in crypto, but it's refreshing to see a very different way of behavior, or very different kind of behavior that we're seeing from a lot of the people that are coming into that marketplace.
I'm glad you brought that up because I forget what movie it was where I think it was $1 Million Baby, where you had Clint Eastwood going and asking Hillary Swank like, where are you weakest? And she's like, well, I'm older, I'm not as strong, and I'm not as experienced as this opponent. And it's really big for people to know their weaknesses. Like, for example, you mentioned that you could not compete with them in in that particular trading, but you guys do really, really well in spot offering. So derivatives offering, you can't compete, but you do really well at spot offering, and the cross pollination of some of these, where if you can't beat them in one thing, join them, and they're basically would be advertising for you. Like, how much percentage of clients do you think you'll get just from them going for the spot offering?
That's a good question. I think when we launch our back model, quite a lot, and vice versa. I think when they fully launch their derivatives platform, they're going to get quite a lot of interest from us too. Because what's unique about what we're doing is we're enabling the bridging of TradFi credit. If they can plug into that, they can bridge the TradFi credit into the derivatives platform as well, and they can essentially do the derivatives platform. Sorry, that's just one of the other founders plugging something in the background.
Hello, everybody.
Hi.
So it's really interesting, but also the big difference between I guess what we're doing and what they're doing is they're looking for institutional clients, but they're also looking for ultra high net worths and high net worths. We don't face and we cannot face individuals, which was a decision that we've taken and a decision that we made because my background is corporate institutions. Michael, who's just disappeared to get some food, his background is corporate institutions. Ashwin's background is corporate institutions. Chris's background is corporate institutions. So we didn't, with the best one in the world, yes, there's a lot more margin, a lot more volume, a lot more money to play with that market, but it's not a market we understand. So if it was put up to scrutiny to say, how confident are you building this business? The answer is, well, we have never done it before. So it's not something we do, but these guys are actually looking to face those ultra high net worths and high net worths. Now that's interesting because actually they could then potentially be a means of acquiring our token, because again, we're going to list, once we list on MEXC, we will then list on One Trading. And the purpose of that is then to allow institutions to buy and hold our token to get trading discounts. Well, perhaps some of those holders may be high net worths and ultra high net worths that are trading and want to access our anomaly detector, which is the main or the principal utility of the actual token.
You just had their Definity Markets, your account on X, go out and post like, hey, just a reminder, we're integrated with Fireblocks, a massive step forward. Yeah. And I think you had told us that almost no other token that's available on there has less than a $200 million market cap. And then you just announced MEXC today. We're up like 6.1% on the day for the token on this. We're up like 7% yesterday too.
That's not bad. Yeah, absolutely. So look, the move to get onto Fireblocks took a long time to actually get approved by those guys. So yeah, they eventually approved it once they understood what we're trying to do. So yeah, we are the only token that has a market cap. I think it might be slightly more. I think it might be the only token that has a market cap less than 225 or 230 million. So we have a lot of room, a lot of headroom to go for between our 7.5 or 8 million market cap today, and I think where fair value is, which is a lot higher.
Yeah, it's funny. Like a lot of people that come into the crypto space don't understand what we really are as early stage business investors. And sometimes, like, I like to invest in the ones that have some problem that they're solving, and they're just on the road of that, and awareness is still low. And what's funny is you and I were introduced like a couple of years ago, and Paul came, you offered Paul to join us for Wednesdays. And so I'd known Paul for forever, but I didn't really know what Definity's token was about. And we had a conversation about it 6 months ago. And I was like, oh my gosh, this is huge. What you're doing is really cool. It's solving a real problem. And I started then loading up on Definity's token like crazy. And really, once I understood what you were doing behind the scenes, have made a conscious effort to bring you on as much as possible so that my audience can become aware, because these are the type of projects I love to invest in, because you're solving a real problem and you're connecting up institutions to be able to buy crypto in a way that they're used to. Now, why would institutions go this route rather than just buying a spot Bitcoin ETF?
Okay, so there's a couple of things that are quite interesting. So why would they go this way rather than buying spot Bitcoin? Absolutely. So look, they could do. I'm a big fan of Cathie Woods. I think she's awesome. Big fan of what she does. But do I really want to be paying 25, 30 basis points per annum just to give her the privilege of holding my assets for me? Probably not. So I think it's great. I love the fact that we have these ETFs. I think it's a great step forward in the legitimization of digital assets as an asset class. The biggest arguments I get into with a lot of my friends that are still in TradFi is they can't get their head around it because they just don't understand why does this exist. They don't understand what and what they don't understand. And I was the same. You know, I was for many years. The banker in me was like, well, you can't just invent a new asset class. That doesn't happen every day. Well, it doesn't happen every couple of decades, and that's what's happened. So they haven't got their head around the fact that this is a new asset. And I think the fact that we have ETFs, even though the SEC only accepted the applications begrudgingly, but those 11 are wonderful at opening the door. What's going to happen is people are going to go in, they're going to use those and go, this is fantastic. Okay, cool. We understand how this works. It's very expensive. How do we make this more cost effective? How do we make it safer? How do we make it more scalable? Because Bitcoin's great, but what if I hold a bit of Ether? What if I want to hold a bit of, I don't know, let's say some Binance, maybe not Binance Smart Chain, maybe some Cardano, for instance, or something else, or some Ripple. How do I do it? Well, there ain't a Ripple ETF. So what do I do? And you can, there are what are called ETPs, so exchange traded products, and there's lots of people, like for instance, the good people that Cathie Woods has partnered with, that offer ETPs, exchange traded products that will give you a combination of these things. But again, you don't own those. You can only essentially you own shares in a vehicle that owns those assets. So what's going to happen is there's going to be a increased legitimization. There's going to be more demand to go into this asset class, and then people are going to think, okay, this is not very efficient. We're paying way through the nose to do this. Can we do this ourselves? And if so, how do we do it? And that's the point in time where we come along and say, well, you can do it basically with us. You can have custody with whoever you wish, Fireblocks, for instance, and you can use the bank that we're partnered with to custody your fiat or your bonds, and you can trade with us immediately. And essentially, there's no exposure to risk facing us. There's no counterparty risk. There's no credit risk. Because one of the other points to mention here is that although BlackRock, the BlackRock ETF, obviously is one of the largest that exists today, their custody is with Coinbase, which is great. But last time I checked, they don't have a credit rating. They don't have a very big balance sheet either. And likewise with EDX, which in my head always sounds like some kind of erectile dysfunction medicine, but it's not. It's an exchange that was launched by Fidelity, and he was a good wholesome chaps, the high frequency guys out of Chicago, Citadel, those good chaps. Who we love, again, it's a subsidiary. It's not very well capitalized. It does not have the same credit rating as Fidelity. I wish it did. It does not. So there are some very interesting and unusual opportunities. The other point that I'm often asked is, why would a bank partner with you? Why would a bank not just do this themselves? Which is a valid point. And it's a question I was asked by a lot of investors early on, saying, well, surely banks have got traders. Yes. Surely banks can build risk models. Yes, they can. But the issue is that it's very difficult for them to get internal sign-off to go out to market, spend, and banks typically spend in clips of 10 or 20 million at a time to do these things, huge amounts of cash without knowing whether the model even works. So a very easy way for them to beta test it, and obviously, yes, notwithstanding the fact they probably spent $1 million on legals, is to partner with people like us, see how it works, and then say, okay, this is pretty interesting. We can now deploy our own capital into this. We can take a stake in this business. We can actually really put some rockets on this and build and scale. And it saves them a lot of time, effort, and money. Because as long as we go out and we use credible infrastructure, so for instance, when it comes to order matching, execution matching, we're working with a company called Talos, which is it's a unicorn, it's $1 billion company. When it comes to the custody element, we're using Fireblocks, which is, I think last time I checked, worth $8 billion. So these are tried and tested solutions. I mean, obviously we have built tech ourselves, but again, they've not been scrutinized by the bank and they will not be used by the bank. So that's a really interesting angle here as well, which is why I think, once the banks begin to realize what the size of the prize is, because I don't think they understand there's a lot of money. They don't quite get how much. Once they realize, they're going to start piling in.
It dawned on me about a week ago. Like one of the questions I've been asking myself with institutional adoption, will this be a super cycle, meaning a bigger cycle than normal? Because every 4 years since 2013, we've had a parabolic move in crypto, which is what I wait for. I generally buy during when things are low, and then I wait till everybody is talking about crypto and buying crypto, and that's a good sell point for me. But a super cycle would take us maybe 4 or 5x total higher for the market caps and where they hit. And will that happen? And it dawned on me as I was listening about a Japanese company that copied basically Michael Saylor's strategy. And they're doing exactly what Michael Saylor is doing, essentially using an existing business with existing cash flows to borrow money to buy Bitcoin, and then borrowing on that Bitcoin to buy more Bitcoin. Yeah. And I thought, oh my gosh, this is going to be a monster, because we're probably going to see 10,000 different companies doing that, which will cause a speculative bubble that will be crazy, and probably then burst pretty big, because that in itself reminds me of the housing bubble of like, the US and Canada went through a housing bubble in about 2002 through 2007, whereas housing values went up, people borrowed against them, bought more houses, and there were more until the house of cards collapsed. But I was like, wow, if a bunch of people started copying Michael Saylor's strategy, that would cause Bitcoin to go crazy, and green candles create more green candles. But that will also get everybody in the world completely focused on Bitcoin and crypto. And you will have all these institutions and banks saying, oh my gosh, how do we get in on this right away? Which you're set up for that. Oh, we already have the infrastructure. Otherwise, it's going to take you 2 years. But come partner with us. We'll get you access. Your clients can have access. Partner with us. So if it does go that well, that is the perfect scenario for everyone, all these banks, to feel like they don't have time to build their own stuff. They need to have access now, which you've already been setting up.
Yeah, look, absolutely. So look, there's two demographics that we're catering to. We're catering obviously to this new cohort you're talking about, those that are looking to enter the market that are not necessarily at today. And there's also the existing cohort. So there's a whole bunch of hedge funds we're speaking to today that are trading crypto, and they are, they've got 50 million with KuCoin, they've got 50 million with Binance, 50 million with Coinbase, so on and so forth. They're tying up hundreds of millions of dollars. Whereas with ours, it's like, if you already have a $100 million line with this bank, you don't need to do anything. You can just use the existing line you already have. It's so capital efficient. It's incredible. So what we're going to do is we're going to suck that volume out of these exchanges into our platform, because it makes it much easier for them to trade. It's an environment where they are not worried about, well, I've got 50, so I'm probably going to lose only 50 if one of them goes bust, or 100 or two. They don't have to worry about any of that. And again, people say to me, well, hey, banks go bust. And the answer is yes, they do. And look, I'm not saying banks are the good guys necessarily. They do a lot of bad shit, and I know, because I was there in the credit crunch and I saw some of the horrific behavior. I get it. I'm not saying that they're necessarily the good guys, but all I would say is that when Lehman's went bust, those people that were owed money from Lehman's got 88 cents in the dollar. I'll be willing to wager that those that owed money by FTX will get 0, and that's the difference.
Yeah. They, I think they just got, for FTX, they just got I think it was Unfolded that just reported it. They had a 24 billion tax claim with the IRS for 200 million in bankruptcy court, 685 million lower priority claim to be paid after customers and creditors. So yeah, we don't know how much they're going to get.
Well, I'm now an unsecured creditor, so I don't think I'm getting my money back.
Yeah, exactly. That is the risk, right? When I hear those big numbers on exchanges, it just makes my head blow, because the current model with exchanges is that if they go down, your assets are reflected as their assets to pay off first their creditors, then you, which is such a risky model, right? So your funds, and you're used to holding your funds, you send them over to exchange, they're technically not your funds anymore sitting on that exchange. And so to have 50 million tied up in there, even if they have it diversified across a bunch of things, your model is just a safer model for them.
Yeah, definitely. I mean, look, I guess someone said something really interesting the other day, and they said, look, you're a bit like a more efficient, slicker version of MetaMask, which initially I found offensive. I was like, no, it's completely different to our model. But actually, I kind of understood what they're saying, which is that with us, you can custody with whoever you wish. You can custody with 5 blocks. So you keep your assets. I don't touch them. You've got a line of credit with this bank, and you can trade all day long. And it's only at 4 p.m. London that you have to settle the trade. But if you bought 100 Bitcoin and you sold 99, you don't need to have an exposure of 100 Bitcoin with me or to the bank. It's actually just the 1 Bitcoin. That's it. So actually, because we net settle these trades, your exposure is really quite small. So I guess there's an element of truth of what they're saying, because we've separated and segregated custody of fiat, custody of digital assets, and trade execution. So we're just a trade execution venue. Who you custody with, we don't really care, as long as there's someone credible. And again, with our bank credit model, you've got that element of essentially credit lines all covered as well.
Yeah, great explanation. Well, we're 50 minutes in. And Manu, we had asked if you would stay after for a discussion with our private Discord members. These are the Crypto Rain family private Discords, which you can only get access to by joining the Patreon. And we asked Randy to join us there too. So do you have any further comments for this or any final statements? And then we'll end this stream and we'll start the next one.
Yeah, I mean, what I would do is I'd encourage everyone to do as much diligence and research on us as possible. I would encourage them to look at some of the tech that we built. We built a risk engine called the Anomaly Detector. We built this specifically for banks. And essentially, you get access to the Anomaly Detector by buying and holding the DFX token. That's the principal utility of the token. And this is probably one of the most, for anyone who's a trader, this is probably one of the most accurate models of forecasting volatility events. So essentially I'm not going to bore you because I know we're running out of time, but essentially what it does is it looks at a 60-minute horizon. And in that 60-minute horizon, about 85% of the time, it accurately predicts large asymmetric moves across 12 different assets. So look, we think it's huge, it's phenomenal. This is the initial phase. We're also launching a bunch of algos as well, so execution algos, and also market making algos, which we're beta testing over the next 4 or 5 weeks. So we've got a really interesting pipeline of AI-powered tech that we've built in partnership with our friends at Axion AI, who are also, again, our partners and shareholders in our business too.
You bring up a really good point. I see in crypto space a lot of people chasing different AI projects, but what does crypto and AI really have to do together? Like, there's 2 areas that I see AI massively improves things for us. One is essentially an anomaly detector, kind of reading through massive amounts of data to detect when things might shift another way, because a computer can see that faster than we can process all that data, which is essentially what you created. So Definity is also an AI project. And I do see, like, I got another white paper on an AI project. I'm tired of all these AI projects that they're not really doing something substantive, whereas Definity's anomaly detector is actually very substantive, and you have existing clients that are using it to make trades and trading against it very profitably.
Yeah, that's not what they're supposed to do, but that is what they're doing. Yes, it's supposed to be for managing risk, not for taking risk. But again, look, I'm not going to pretend that we were smart enough to realize that when we were building it, it would be able to generate alpha. I wish we were very fortunate that we built such a great risk engine. It does potentially make money. And then we kind of thought, okay, well, what if we turn this into an algo? And actually, could we make this into an execution algo or a market making algo? The answer is yes, and it works pretty bloody well.
Awesome.
Ray, before we bounce, how many people we have here?
281.
Nice. Do the last, you guys have Definity Markets just put out like a minute video, minute 30 video, just kind of saying who you guys are. Is there any more of those videos coming out? Like, hey, we're going to do this, once a month or once every quarter.
Yeah, so look, absolutely. There's a lot of people that have asked us to do explainer videos in terms of, again, the core business, some of the stuff we're doing around AI, how we're pushing the envelope. So look, the problem is, I think the problem is that I found is that when you're in the weeds building stuff, you think a lot of this stuff is bloody obvious, and then when you speak to people, you think, oh, actually, it's actually more complex, and people just don't get it. So absolutely, we have done not a wonderful job of marketing some of the very cool things that were built, and we realized that, so no, we're going to address that. So maybe not once every month, probably once every 6, maybe 8 weeks, we'll be looking to add a little bit more content to get people's heads around what we're doing and how we're doing it.
Cool. Thank you. Thanks
All
for
right,
having
gentlemen.
me.
Thank you for joining us. I will send you the link, the new StreamYard link here. And for those in private Discord, I will send you the YouTube link to that. It is only accessible by having the link directly. Thanks so much, everyone.
Bye, guys.
Thanks.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit right before you could. Was taught to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that. And I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. Principles are simple, but leaving a mark. Why when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy but with knowledge the game show. Sticking out this road cause soon will come a bear market. Learning and growing and when it's slow will be the target. Naysayers come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time the ball will bring back the gains. That makes it worth the effort cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crafting. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough. And that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn.